Hello, I'm Bollard from interest.co.nz and welcome to 90 at 9, brought to you in association with ASB. This is our morning briefing where you get everything you need to know in 90 seconds at 9 o'clock, starting now with news that Finance Minister Bill English has told the banks he doesn't want them to pass on mortgage rate hikes. He says that the banks need to go easy on the rates, and he says that the government, through its guarantees, the retail guarantee and the wholesale guarantee, actually is taking on some of that risk, and the banks shouldn't expect to make bigger profits at this time. He's putting the pressure on the banks, adding to the pressure from Bollard earlier this week. Meanwhile, the G20 meeting in London has finished, and it's announced a $1 trillion US plan to increase the size of funds that the IMF has, also the World Bank, and to regulate hedge funds and others much more tightly. Elsewhere in the States, the Federal Accounting Standards Board has announced changes to the so-called mark-to-market rules. Now, this is normally an obscure accounting thing, but it's been closely followed in the markets because the banks, up until now, have had to revalue their toxic debt assets very aggressively, which has often forced them to raise more capital, in some cases go bankrupt. Now the mark-to-market rules have been eased slightly, so the banks only have to take on the value that they believe they could get in a, quote, orderly sale. Now the Dow has rallied, partly on the G20 plan, but also on this mark-to-market rule. The theory being will stop banks having to raise so much cash and maybe stop them from going bankrupt. I'm Bollard. That was 90 at 9, brought to you in association with ASB.